Hey guys, welcome back to my channel where we talk all things real estate, investments, financial literacy, social media, and how to make money in this post-pandemic world. So make sure that you like and comment on the video. Make sure you subscribe to the channel. Today we have a really important topic, so let's get into it. So as most of you probably have heard, Silicon Valley Bank, or SVB for short, has gone under, where everybody is scared of that. It was a big run on the bank where a lot of people wanted their money back, and SVB couldn't make good on the money that the people in there wanted to get back. So what does that mean for you? And specifically, what does that mean for real estate? So let's talk about that. So SVB going out of business actually did, in a good way, change a couple of things with the real estate market. The biggest thing that it affected was interest rates. So if you have been paying attention and reading articles about mortgage interest rates, they are up right now. But when the SVB went under, interest rates actually dropped down a good amount that day. They did come back up a little bit, but they're fluctuating and they're starting to go down a little bit more. So what does that mean for you? When interest rates go down, that is a great thing for a home buyer, because that means that you can afford more house. And even if you wanted to buy a home at the same price point, so say if you're buying a house at 500,000 and your interest rate was, for example, 7%. And then once the bank goes under and interest rates went down, say if they went down to 6.5%, you save a couple $100s a month on your mortgage payment because your interest rate went down. So that's a very positive thing that we saw when SVB went down. Interest rates, because the shock of the market, interest rates dropped, and we've actually been seeing interest rates dropping even more a little bit the past couple days. So first things first, don't be afraid. So Silicon Valley Bank, or SVB, they are not your typical run-of-the-mill mom and pop bank. So they are not like a Bank of America or someone else that banks with everybody. They don't typically give out mortgage loans, things like that. They are mostly for startups in Silicon Valley, hence SVB, or Silicon Valley Bank, their name. So for the most part, it is not going to actually do anything with your bank unless you bank and you're a startup with them. It's not really going to affect your bank. So that's the first thing to remember. Second thing is, it's not really doing too much to real estate. The thing that it is doing though is speculation, and that's how markets change, especially real estate. It changes with speculation. So what does that mean? So if people speculate that banks are going down, a lot of other banks potentially may have a bank run, and that means that people want to get their money out and they probably want to invest in something a little bit easier, or something that has a little bit less risk, like treasury bonds, things like that. So having a bank run on other banks is not potentially going to happen, but we are keeping an eye on it coming soon, because you never know. People tend to think, and sheep think a lot of times. If one bank is going down, people think all banks are going down, and that's not actually true. But let's talk about, what does it actually mean for the real estate market? Just like we talk about all the time, the best time to buy a home is whenever you and you alone feel like you're ready. I wouldn't be trying to time the market. I wouldn't wait for a bank to collapse, interest rates to go way down, things like that. I wouldn't wait for that to purchase my home. The best time is when you feel like you're ready. The good thing is now is springtime is coming, or it's actually kind of here now. Doesn't necessarily feel like it in Washington, D.C., but springtime is here. That means more people are putting their homes on the market. So there's more inventory that's coming to the market. There's more closing assistance that could be given, because there are more homes coming up, but it's still not enough, but it's more there. So it should be less competition. You can get inspections done, repairs done, all of those things. The best time to buy a home is when you feel like you're ready. I wouldn't wait on an interest rate for that. So all that to say, SVB going down did actually make a positive impact on real estate. It didn't make the market go down like some people were predicting. It made interest rates go down, which is great for you as a buyer. You can afford more, your payments lower, your money essentially goes further when you have a lower interest rate. So if you're thinking about buying a home, it's springtime now. The best time may be right now. And a quick tip when you're looking to buy your home, first things first, get a good real estate agent. We will walk you through the entire process. We'll help you with pre-approval, finding the house that you want, getting inspected, appraisal with the lender, all of that from pre-approval to close. Make sure you get a good real estate agent that can hook you up with a good lender. Now, in my opinion, is the best time. People are starting to get back in the market. More homes are getting on the market, so it's more homes for you to buy. If you're interested in buying a home, my email is in the description to the video. Feel free to shoot me an email or drop a comment. Would love to help you if you're in the Washington, D.C. metro area. But now is a great time, in my opinion, to buy a home. Interest rates have been going down a little bit, and SVB hasn't made a big impact on the market like we thought it would. I think it's a great time to buy a home. Let's go.